Hello, everyone. Mike Arnold here, co-founder, Patrick, and partners along with Bob Iacino, who will be on very shortly once I can tear him away from his phone, probably with his Twitter account, trying to engage with Elon or something of that. uh, but by the way, we'll get to his thoughts on the bloodbath today. You see it up behind me. There was pretty much nowhere to hide. Not very many places to hide. Maybe a little oil related things, but not many places. If you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, please give me some comments and like or dislike the videos or do something. Do something to help us keep getting out there. Again, big shout out to Sterling, who's been helping us with the Twitter account, getting more engagement out there. Bloody Tuesday, huh? Yep. It wasn't Taco Tuesday. It was definitely Turnaround Tuesday. Hey, George. Hey, Jake the Snake. Yeah, wow, what a day. That pretty much sums it up, and it's going to continue a bit. I mean, we had Google come out with their earnings, Microsoft with theirs. Google more share buybacks. So we shall see. Robinhood just announced a 9% workforce layoff. Hey, Christoph. Hello, Wavy. Glad to see people still here. Well, if you're at a loss for words, you're not at a loss for typing. So, by the way, just to recap for people who don't catch every live stream, it's like I just spoke to a few of you a couple hours ago, and we're already back. We had the emergency live stream at midday. We're still in deep negative gamma territory. Amplifies, again, just clarifying, negative gamma amplifies up and down moves. It doesn't just mean things are going down. So keep that in mind. FOMC still at 96.5%. We already looked at the heat map. There's not much point besides Tesla just brutalized 12.18. Economic calendar, we already went over what today's results were at lunch, but tomorrow we have a bunch of housing related stuff. That's going to be big. And then we also have crude oil Wednesday, or the oil numbers come out tomorrow. But tomorrow will be a little quieter day before, again, Thursday and Friday's got a lot of potentially market moving information out. After, as just said, Microsoft was down. Alphabet / Google was down. Visa had a gap up. I'm going to be watching for a gap play in Visa. Those are the three I was checking out. Let me know if you want to check out anything else. By the way, tomorrow morning, Boeing, Spotify. Spotify should be interesting. Let's see. That's the major stuff I'll be watching. So not a lot of stuff tomorrow morning that's really going to shake up the market before the open from my perspective. But oh, sorry, I still had it on a Tesla chart. That's just for if you're bearish Tesla, that was a thing of beauty. If you're bullish, that's pretty ugly. There's your S&P. With that, let me hit the magic Bob button. There we go. The magic Bob is here.
I don't know. Elon won't respond.
Elon's not responding to you?
No, he's very busy these days.
Oh, he's very busy trying to buy Twitter. So let's see. Let's see who else is here. Hey, Ken. Wavy, please stop the selling. In what? Specifically, save Kathy. I don't think there's much hope for that in the short term. Hey, Amit. ARK and the NASDAQ new yearly lows. Yep. How about the one day? How one day changes all crazy thing. No fear yet. Hey, Dan Jet. And we'll see what Wavy's going to type next. But Bob, let's see. 341 basis points down in the S&P, 502 in the NASDAQ, 248 in the Dow. Russell down 362 basis points. Oh. Tesla down 12.
What's the ARC symbol we should be looking at? Which ARC symbol should we be looking at?
ARKK.
ARKK.
That's the flagship. That's the mothership.
The innovation. Oh, wow. That is horrible.
This is an ugly chart. Look at this chart. Look.
It Yeah, there's almost joy in that chuckle.
Well, I'm tired of, and then she's out there. She always pumps up her stuff. You're going to see 50% returns. And then, you know what? With her management fees, forget it. I could do better than that. Uh, Bounce breaking below our harmonic 5243 cluster finally. By the way, next area. Remember, we did close below the 62.5 back on the 13th of January. And that means we should return to the 87.5 to 100. The 87.5 closing in quickly at 48. We'll just call it $49. So the moment you see $49, ring the bell. It worked again. And then the full retrace would be down to 33. If we see 33, wow. That would be the lows from March, the COVID lows.
It's a little more than the 1 year anniversary of ARK trading at freaking 160.
Yeah, so that completely ugly. What do you say? Wave Elon Musk borrowed 12.5 billion USD for your margin loan to complete his acquisition of Twitter. However, he had to pledge 62.5 billion in Tesla shares. The default, I saw that the default level's around 570. So we shall see. Well, there might be interesting thing to see if there's some extra shorting going on in Tesla.
So look, I want to caution everybody about reading how this deal is structured and thinking that you know every nuance of it.
You don't.
You don't. One of the things that I heard today from a friend of mine at Goldman Sachs, and I think they're part of the money raise. Sorry, my right eye is just burning like crazy. I think they were part of the money raises. They said that Elon gave them under the table promises of getting in on a bunch of other things he's involved with. So you'd be surprised at how forgivable some of these loans are going to be, or some of the maybe sub clauses that are in it that don't cause Elon to suffer that much pain. So just be real careful about thinking that we know from news stories, even, especially from the rumor mill on Reddit and everything else, that we know how this deal is structured. We do not know how this deal is structured in any way, shape, or form. It's part of the reason for him to take it private, I believe, is so that he doesn't have to disclose much of how the future structure, financial structure of this Twitter deal is going to be. So just be real careful thinking that we know what's going on with this.
So, separate from Tesla and Twitter, what are your thoughts on the broad market, the sell-off today, blood in the streets? It looks like we're going to close the lowest level unless we get a sudden bounce in the next 15 minutes. Looks like we're going to close the lowest level since, let's be a little accurate here. I hate to be inaccurate, but that would roughly be since it looks like around May of 21, May 20th of 21.
So, okay, overall, so this one actually feels a little bit like capitulation. I don't think it's necessarily over, but just the hyperbole behind how, like, even you take Wavy's words in here, for example, of like, please stop all this. That's verbalizing capitulation to a certain degree. I think there's probably another day or two behind it. You've got big tech, and I think people were looking for things like Microsoft and Google to save it. Google, by the way, was down almost 6% in the post market here.
Yeah, you can see it down here. I mean,
and that's with buybacks.
Yeah, my next target was 22.19 and it's 22.35.
Yeah, so that's getting hit pretty hard. Microsoft, which I didn't think had that bad of a report, is down over 2.1% right now in the post market. This is not tech coming to the rescue of a weak market as it did last time. We sold off with any sort of gusto. And this goes back to everything that Mike and I have been saying. You're getting an education now that should not keep you out of the markets in the future. An education of how things can get, regardless of, Wavy, I think it was you that was saying it's really hard to watch these rallies and not participate. Now you're seeing why sometimes, if the situation is correct, watching those rallies and not participating is a very comfortable thing to do. It's very comfortable. For those of you that are looking at your long-term portfolios and watching this sell-off and thinking, please make it stop, Don't worry about it. Really, don't worry about it. You'll start accumulating stocks that you like, at least you should be. Maybe not today, but soon, preferably on the way back up. But as you see the rotation zone on the chart there get lower and lower, that's something I actually like to see for longer term positioning, because now you see the corrective bottoms and the turns happen at a lower cumulative rate. So you can get into things maybe not at the absolute bottom, but much closer or much lower than they were had the rotation zone just turned, 4, 5, 6 weeks ago. And you're getting into things. No, I don't, Wavy. I know it's not up there yet, Mike. I think part of the reason this is happening with rates going lower, well, rates went lower today, but it didn't save anything. Didn't save anything. You saw a move up in gold, but even gold fell from the highs. You saw some dollar strength with yields falling. Yields fell today. The curve flattened today. And I don't think Powell's going to ease up. And I think that's part of the reason that the market is doing what it's doing, is because I think people finally believe that he's not. And by that, I mean larger investors, that he's not going to ease up. So the savings rate rolled over. Okay. Now, the savings rate that's reported in most bits of data is the increase or the decrease in the rate of savings growth. So that rolled over. So I questioned the person who pointed that out to me, who's from Renaissance Capital. I said, yeah, but look at the savings rates rolled over. He goes, yeah, but the ultimate level of savings is still very high. So what do you think it means? And I questioned him with this and he didn't respond. What do you think it means then if the savings rate is rolling over, but the ultimate level of savings is still at not a historical all-time high, but historically high, right? It means that poor, lower middle class, and middle class people have exhausted their savings. The upper middle class, lower rich, and rich have not yet. That's what that means. So it means that the people who actually buy things, are forced to buy things with these levels of inflation, are going to stop. And those are the spenders. Think about somebody in the upper middle class to lower wealthy. They can only buy so many washing machines. They can only buy so many packs of chicken breast. They can only buy so many, well, they could buy a lot of cars, I guess. But, you're still one person. When you have great wealth and you have a massive amount of savings, you're still only one person. So what those people try to do in times like this is find businesses that are undervalued and buy those. They don't support the economy. They support future economic growth. So, no, I don't think Powell's going to stop, because inflation needs to get under control, or it's going to get way, way worse than it is now. Earnings all in are not that bad. And look what's happening. If you remember when we talked about it, I thought that next earnings season was going to be the bad one. This one's not actually that bad when you look at the numbers.
Well, Dow hit the second target from the double top. that's
Nice.
that's the good news. If you were short, that is. uh lower level is 32,835 still, by the way. And no, I do, before anybody asks, I do not have any buy signals at the moment. Not on charts like this. That doesn't mean you couldn't get a short-term buy overnight, but this would just be catching the falling knife. And I know somebody's going to say on some other streams, this is a buy, and then if it gets the bounce, they'll say, see, I was right. But, is it a buy for an hour? Is it a buy for a day? It's not a long-term buy. Even if we get a short-term capitulation bottom, it's just a return to prior rotation zones and levels. Remember, we closed below that 62.5, favored to return to 87.5 to 100. The S&P hit that level. So that's hit its first target area. Does that mean it has to stop? No. It doesn't have to stop. Remember, that's how these things were developed, is to find the next target areas. The NASDAQ below its major support level from back at, end of February, mid-March. Now, this is a key resistance. So even now, 13,050 is now first level of resistance. By the way, if it does continue lower overnight, 12,662 to 12,558 are your NASDAQ targets. What am I going to be watching overnight? The 4 hour rotation zone's all pretty far off. I have to still go with that 13,000 to 13,042 on any bounce play, and I'll keep an eye on that 1 hour rotation zone. S&P next target lower 41.16 to 41.24. Any bounce, a major bounce would take it back to about 41.93. Dow, again, it would be this prior support shelf right below the first target on that double, coming in about 33,300. I'll make a line there. That would be my bounce targets if we got any little bounce overnight or in Europe, but there's no long term signal yet. Dow posed. So you look at this, you guys learned so well. Dow poised to close below 62.5% daily. Yes, which then would favor not only with the double, would eventually favor a return to the about the 32,560 area to about 32,144, 160, sorry, 32,167 area. So, let me just do a couple other. Russell, I took a look at this at lunch. Now we're closing below this. You remember we had a 1, 2, 3, 4, 5, actually 6. You had multiple bottoms in here, and closing below all of them except maybe this low. I have to see. Let's see where we're not officially closed yet, so we'll have to peek back at it. But this is not good for the Russell. Breaking on a closing basis to new lows. Hasn't been in this level since beginning of December of 20. Bob, any thoughts on crude? I mean, technically, I don't have much. It's in this major consolidation pattern.
No, so if you look toward the beginning of this consolidation, the range there is about 25% from low to high. The range recently tightened up to about 16.5% from low to high, and now it's tightened up even more over the last 2 days. I suspect we're going to be sideways in here for a little while. We've got the demand slump with China. Now the Beijing area has started with mandatory testing. So that's a hangover that's going to stay for a little while. Libya is almost back on board in terms of production, not quite there yet. So there's a little supply bump up that could hit crude oil. But also, the average tanker size from the U.S. going to Europe is at a historic high, 1.4 million gallons per tanker. The high before that was about 1.2 million gallons, meaning they normally send a million-gallon tanker. They've been sending 2 million-gallon tankers over there, trying to ease up on Russian oil. So while they haven't officially banned it, they're setting up to ban it. And if they ban it, Russia had 34 million barrels of oil last month they didn't sell. So those are sitting in tankers. So the volatility is going to come through, but I still suspect the first breakout move is going to be up, but I no longer think it's going to get back up to 130. I think it's going to get closer to that 116, 117 high that happened in late March, and probably that'll be the top of the range for now. It's a pretty wide range, but this contracting range means a breakout one way or the other, but I don't think it's breaking out to new highs or breaking down to new lows at any time soon.
Yeah, and for me to get to target the new higher, we'd need a close above about 116.50. That's a 62.5% retracement, which then statistically would favor a return to 125.80 to the highs. But we're a long
So
way off from that close.
listen to this in terms of earnings, where I said earnings aren't that bad. As of Friday, okay, so as of the 22nd, 20% of the companies in the S&P 500 have reported actual Q1 results. Of those companies, 79% have reported EPS above estimates, which is above the 5-year average. The 5-year average of beats is 77%. Companies are reporting earnings that are 8.1% above estimates in aggregate. That's below the 5-year average of 8.9%, but it's still above estimates. Okay. So we're seeing outperformance in general on earnings, and we're still getting hit like this. So looking for tech to save. What do we got tomorrow? Tomorrow we got Spotify, we got Meta, which I'm still calling Facebook.
We got Boeing, we got
Boeing.
Spotify, And then after, yeah, we have Meta and uh, who's the other?
CME groups in there, I know, but that they don't matter that much for this.
And then we have, sorry, I've got too many things going on in my head. We have PayPal, Meta, Qualcomm.
PayPal, that's the other one I was trying to think of.
Tomorrow, PayPal's just trading like dirt. Uh, then Thursday gets really interesting because you have Apple and Amazon.
Yeah. Be interesting to see if Roku gets hit like Disney did and Netflix did. In terms of revenues, 69% of the S&P 500 companies that have reported actual revenues above estimate, which is equal to the 5-year average of 69%. So revenues above estimates is equal to the 5-year average. Think of the last 5 years, right? Stock's been strong or weak, been pretty strong. In aggregate, companies are reporting revenues that are 1.3% above estimates, which is below the 5-year average of 1.7. There's a guidance part in here too, but I got to find it.
Look at my little targets on Google after hours. Here's the target area. This stuff does work. Hey, there's a potential double bottom. Let's front run it and buy.
Nope.
What?
Nope. Nope.
No. Come on,
No.
it could be a massive winner. They're buying back more stock. Come on. Sterling's got a question. Silver completed the head and shoulders yesterday. Is the sell-off in commodities signaling a recession or anything else from a macro perspective?
Not this particular sell off because it's still short term versus the rally we've had. I think we're going to have a recession in the third quarter of 2023 is when I think it's going to start.
Really,
But
that
I don't
long?
really. What's that?
That far out?
Yeah, I think it's that far out.
Wow, you're a lot more optimistic than I am.
Yeah, and it's going to be the third quarter of 2023. Number one, because again, like the housing market's not going to collapse, in my opinion. It's going to slow its rate of change, but I don't think it's going to collapse. And that's going to hold a lot of things in. Remember, the recession has to be two consecutive. Well, I still go by the old definition.
Yeah, they don't
Two
have
con-
that definition anymore, Bob. It's
no,
all
they
they
don't use it.
decide it was a recession. It was a recession.
I thought it was a perfect definition. Two consecutive quarters of negative GDP growth. It's a perfect definition. I could see one before that, but I don't know about two consecutive because what would happen with the Fed the second there was one or even a hint of one?
Well, again,
They'd
you
probably
talked
stop.
about though you talked about inflation. They got to get inflation down, and
Yeah.
I mean,
I
even if
mean, you know,
even if it's hovering, let's say it pulls back to 5%, is that down? Yeah, it's down from here,
right.
but it's not down.
So here's what I think they'll do. You guys can quote me on this later. If they can get inflation down to between 4.5 and 5.5%, if we start to get GDP in the low ones, okay, they'll stop. And the reason they'll say we now need to stimulate the economy to get people to be able to afford the 5% until it slowly trickles down as supply chain problems ease. They'll blame the supply chain problems for that last remaining 3.5% over their target, and they'll stop hiking. That's what I think they'll do. And they'll say we need to make sure we don't completely choke off the economy so people can afford to live while the supply chain works itself out.
And then what if it persistently stays 4.5 to 5.5%?
Man, I mean, they're in it. They've got a problem, and that's what I mean. I mean, if you got 4.5, 5% inflation and it's persistent, there's your recession. There's the driver of it, the main driver of it. Although it's still the Fed that drove it.
I was just checking in on Microsoft to see where that
I
was.
got to do product placement.
Well,
There we go.
is that better? Well, what's in that bottle is what I'm worried about.
It's just water.
Well, I got my handy old iced tea here.
Nice.
So
You own Starbucks stock? That looked like a
that's not
Starbucks stock.
Starbucks. It's actually Panera. And
Oh,
why? Because they added iced tea into the coffee club, which is only $8.99 a month.
look at that.
And I can get a huge iced tea every 2 hours, and it's actually cheaper than going to eat, making it myself or going to the store when you aggregate it over a month.
Mhm.
So they are losing money on me being a customer of theirs because I can drink a lot of iced tea.
Are you still a member of that gym where you're free as long as you run the treadmill enough?
No, because I don't have to go anywhere because I got the Peloton and the Tonal.
Oh, you got them both.
Well, you gotta, you know, you gotta diversify your training.
Oh, I know. But I'm saying people don't know. It used to be that if you generated enough electricity, it was free.
Well, no, there was a great deal for a gym I found. The more you went, the less it was a sliding scale. So the more you went, the cheaper it got. Until if I went like 22 times in a month, and I used to go every day, it would actually get down to zero. So if I worked out just 22 out of 30 days, which I always hit 30 days or 31 or 28, whatever it was, depending on the month, I ended up paying for nothing. But the people who like showed up once a month or twice a month, they actually got hammered with their dues. It was a great model if you worked out a lot. Again, you got to make the trade. It's
That
everything's a
makes sense.
trade.
Absolutely.
Everything's a trade. Uh, what purpose is crypto serving at this point other than being another speculative asset? And crypto, I was going to touch on that, but Bob, you can answer that.
What? Say that again. I didn't listen. I wasn't
What
listening.
what purpose is crypto serving at this point other than being another speculative asset?
Nothing. That you're absolutely right, which is why I sold every stitch of crypto. I said this. Who did I say this to? Oh, the writer from CoinDesk. She said to me, "What's a reception? What's a recession going to do to crypto?" I said, I don't know. What's it going to do to the Nasdaq? And she said, "What do you mean?" I said, "Call me because I'm not putting this in an email." So she called me, and I said, "Wavy, you're not wrong, okay, but if it doesn't detach from the Nasdaq in its almost one perfectly one correlation right now, it's not for investors. Okay, it's not. If you're somebody who's like, well, I want to be in crypto as a hedge against fiat print money printing and wars and the ability, or I should say the inability to travel with gold if I needed to, and all the reasons crypto exists. We're talking about crypto, not blockchain technology. Crypto. It is literally almost perfectly correlated to the Nasdaq nowadays.
Well, it's been about 80% recently.
Yeah,
I mean,
and if that
that's a
if
high correlation.
if that doesn't detach, I'd rather own the Nasdaq or short the Nasdaq than own crypto or short crypto. I really would, because for crypto to turn around, the Nasdaq has to turn around.
And crypto today closed below the 62.5% level, which favors a return to about 34,800 to about 22,000 or 32,900. So we could see even on rallies are to be sold, and we could see a fair amount of more pain in Bitcoin. That was Bitcoin specifically. Ethereum's still a long way off from triggering it, but that's about 2692 area. Close below that, then triggers a return to the lows either January 25th or February 25th. So those also sold down. I just wanted to get to that Bitcoin one. By the way, ratios, if you're following along with the mega cap ratio, probably tomorrow will open below the next target down, but you see here still running down. We have a lot lower potentially to go with that mega cap ratio long term. And closing in on that 200 week. So it'll be interesting to watch that unwind. Also, value versus growth still has got a long way to potentially fall based off of this double top pattern. So going to keep an eye on that, but just broke below its 200-week moving average. So wanted to get those out there too. What else? Anything else that we got going on? Uh, let's see. Who pumped BTC? Fed? We
So
mean who
what pumped
pumped
to you?
BTC? BTC's been a lot of the stuff's been propped up in Bitcoin by Tether and the other stable coins just printing out of thin air. It's why I said, and once those unravel, you'll really start to see a sell off in Bitcoin. And then it could potentially be we got to wipe out some of the riffraff and all the crap from the crypto market. There's too much crap. There's too much fraud. There's too much Ponzi type of stuff. You don't need 18,000 cryptocurrencies. Okay. You don't need you. We got to wipe some of that out, and then I'm seriously interested in it again. Especially getting out a lot of these stable coins that are just utter crap, and you print them out of thin air. That doesn't help anything long term.
Yep.
Yep, same guys who pumped Tesla.
Nice, Wavy. That was good.
Yeah, Wavy wins the comment of the day. So by the way, with Tesla, that's just ugly. Stayed above the 62.5, so still no statistical trigger yet. But I'd be watching if we do bounce the key levels now. I'm watching that 1 hour rotation zone tomorrow about 9:09. And remember, the 200 now becomes resistance again about 9:01. So 900 to 9:09 is the first level of resistance, and then major would be about 9:27. You close below about 8:69. Sorry, that's the Elon reference all the time. Uh, if you break below 869, we're going to 420. No, I'm just kidding. Then it favors the 753 to the 700 range. But until that happens, we got to see if it puts in a floor. There's a fair amount of support coming in here. You see the prior resistance and the support. So we'll have to see if the selling follows through tomorrow. Lucid up 4% after Saudi Arabia order of 100,000 vehicles over 10 years. So that's 10,000 orders a year, roughly. And that's just still, I mean, look at Lucid hit the next harmonic area and now it's bouncing back into the daily rotation zone. But this would be another potential rollover play from my perspective. And we still have favor, remember? And this is from the essentially when an IPO, again, IPO thing or SPACified, we're still favoring a return to a 1655 and then potentially lower if that breaks. That's pretty key support right there because that when we closed below that 62.5, that was targeting there. Natural gas and US dollar JPY. USD. Any thoughts? Any new thoughts on the USD JPY, Bob?
You might actually get to see some concerted um, actions within the central banks. So over the weekend, there were some comments out of Japan that I'm going to paraphrase because I don't remember the exact quote, but the quote, essentially what they said was, we're going to, currency moves have been too fast, and we're going to do what we can within agreed upon treaties, which led some, me specifically, to believe that that meant there might be some concerted effort to kind of prop up the yen a little bit. It seems like it got propped by this chart. It's not a yen futures chart, is it? It's a
No,
dollar yen.
that's just dollar yen.
Yeah, so the dollar looks like it did weaken slightly, even though if you look at the dollar index, it's been up 4 consecutive sessions. So, it definitely looks like there was a little bit of this takeaway where the yen weakened, but it might have just been off the words. But yeah, I would expect it to turn back around. Generally, when they've tried concerted intervention and it was against the larger macro as well as price action trend, it usually was very short lived. So I think the Japanese central bank, the Bank of Japan, is really just looking to slow it down. not necessarily looking to stop it. So I would expect there'd be some decent buy the dip opportunities,
Well,
maybe somewhere around 125 or so.
yeah, well, you got this little double that triggered, and the target on that is about 125.80.
What's that little high right there? That
What's
little
what?
rotation high to the left. Looks like it's somewhere around March 18th or so, March 19th.
What's this?
Yeah, what's that high level there, or
Oh,
the
the high level
significant?
here is 125.11.
All right, so somewhere in that range between the high and that significant level there. It's
Yeah, and that
probably a decent buy, but
you can see how extended it is. So we could see a little
I
pullback.
wouldn't be able to get risk reward off this. That's what you're wondering. But if somebody needed to get out of there even for that level,
Natural gas. Natural gas bullish flag on a daily chart.
I don't see
Uh,
that.
I don't see a bullish flag there. I just see a return to the rotation zone and prior major resistance becoming support, but I don't really see a flag pattern there, at least on the daily.
I guess if you flatten the chart out, you could make one. But
Oh, yeah, I'd really have to. I mean,
yeah,
there.
pull it back together and push the prices tighter together on the right hand
Don't
margin,
make me work for it.
and then you'll see it.
Roughly see it, but I wouldn't
I wouldn't call it a flag.
I wouldn't trade it as a flag.
No, I would just trade it as a rotation, pulling back to support.
Because if I look at it even on a lower time frame, that's just a mess.
Yeah.
So it's just a rotation right there for me. Anything else you want to touch on before we wrap this up today? Oh, geez.
No, I would not be surprised to see some snapping back over the next day or so. Maybe when, I mean, obviously we're going to react to the next 3 days of earnings pretty sharply, and I wouldn't be surprised to see a bit of a snapback. And we'll have to gauge whether that has any staying power to it. If, as I sit right now, I don't think it does, but we'll see. I don't really have much else to say.
Russia's Gazprom to halt gas supplies through. I can't even speak right now.
Bulgaria, as of the
Bulgaria
27th of
as of
April.
27th of April. Sorry, it's been a long day. I've been talking a lot.
Yeah,
Mike,
look, LNG is another one, just to give you a break from talking. Like liquid natural gas from the US to Europe has increased like fourfold. I did a Bloomberg quick take on Twitter about it. Um, so yeah, there's a definite shift away from Russia, and Russia is likely to press the issue because it's really the only thing they have going.
options to Mike and Bob. Curious, where is your technical target buy for the Nasdaq? Can you draw a trend line? What points do you use for the initiating point? For the long term stuff, the
It's kind
uh,
of broken.
no, I mean, if you want the most recent, it's from the lows at the initiating point. I'd be using is from the lows of the COVID lows. And I was just looking at something else with the way that was drawn. But then the defining point would be in would be till the 15th of March.
Right. So we're already broken that. We're
We've already
testing.
broken that, but that if you rally back, you could always kiss that goodbye. Again, we don't have a redraw on that. You do have a lot of sloppy support in here, but I don't have any buy patterns yet.
Right. Neither do
We
I.
could get something develop overnight with like a short-term double, some kind of thing, but there's nothing. I can't put any. I ethically can't put anything on this stream to say this is a buy
Mhm.
because I have no pattern, and I'd be doing. I don't like to catch falling knives. Again, I'd rather wait for something to bottom and start moving back up and grab the chunk out of the middle in these kind of markets for buys and try to pinpoint a low and pinpoint a high. So how about March 2009? If you want to go way back on a monthly, you then have a bunch of cascading trend lines. And that's going to be, I mean, technically based off this level, you could go from October of '02 to, it'd be roughly around April of '09. Then April of '09 would be another initiating point. that looks like it would go to roughly the February lows of 16. And then that would be another initiating point that looks like it would go to the March lows of COVID. So I was just going off the most recent. You just have cascading trend lines going up. But remember, a defining point can become a new initiating point. Any thoughts, Bob? Do you have any thoughts about Spotify with earnings coming up?
They might actually do well. So it's funny. I don't know. I mean, this would be just a guess off of earnings, off some of the anecdotal stuff I heard. There's something called the Futures Edge podcast, which is now on Spotify. Pretty
Oh,
impressive
well, that's
numbers.
going to, was that on there enough to turn around their earnings?
No, Rogan made some comments about. I don't think he's trying to do any sort of Elon Musk SEC style stuff, but he commented how many subscribers came on after they tried to cancel it. So they might actually surprise, but I suspect analysts have that priced in already. I don't know.
I forgot what oh boy, I'll have to look it up for tomorrow, but I don't remember. They have a pretty wide target based off the options where it's pricing in their earnings. So it could get interesting. They're expecting a lot of earnings volatility in that. I'll have to look that up at some point. Let's see. Yeah, options again. I'm not trying to do anything. I need a reliable pattern for this. Otherwise, I still have to lean to the bearish side until I get some kind of bullish pattern. I just don't see anything on the horizon that changes this macro picture for the better. I hope I'm wrong. Saw recirculated rumor today that Iran may within weeks of getting nukes. I don't know. I just, right now, from I mean a macro perspective, uh, longer term, I mean just based off that, I think we're in for more pain longer term, but we'll get these bottoms, short term bottoms, and then the rip your face off rallies, especially as long as we stay in these major negative gamma areas. You'll get these rallies that just come with momentum bars, both from the buy and the sell. And that's literally what I see. That's why I keep saying in the morning thing, if you have momentum bars that break this level or go through this level, you got to go with that short term.
Yep.
Besides that, if there's a long term pattern that sets up, we'll let you know. After
We got a double. We
after
got
I
a
front
double
run the trade, of
cross.
course.
We got a double cross on a Nasdaq daily, like an NQ daily is a double cross now.
Yeah, which
So then you take that out into the weekly. You look at the double cross on the daily, you take it out on the weekly as to how far we've actually even pulled away from the 8 and how it's widening and flattening on the weekly. It's just, there's a lot of work before we're going to get reliable buys here, I think.
yeah, again, we'll get short term patterns, but those could be. I mean, look,
How about you buy at the 200 week? We'll just do that.
yesterday, I mean, we didn't even maintain yesterday's rally, which was pretty decent, especially in the S&P. We didn't even maintain it for a day. At this, well, here's my first target area. I mean, my first target I've talked about before is 698, so 11,700. Then we have the 62.5, which is sort of like you get below that, then it's a disaster mode. But we're running 10,451 to the 200 week of 10,655. Do I think we could see this over the next few months? Yeah. But my first target is this 11,700. So, and if you put it in perspective, I mean, look at this chart though. Since 2009 lows, I mean that is some chart. And now, by the way, it looks like we may close below the monthly rotation zone.
Let's see. I was just going to say, you want to see how dramatic it is? Put up a monthly. It's really dramatic.
Stop
Down,
thinking like me.
I mean, down 8.67% in March, down 4.54% in February, and then down I'm looking at the Nasdaq futures, the continuous chart, and down 13.8% this month so far.
Yeah, so far.
Yeah, that's pretty dramatic. And if you remember, again, going back to the freaking crash of 2000, the tech wreck that we saw, we're down 21.3% basically since the high close of the Nasdaq, which was in December of last year. Okay, we're only down 21.3%. Now, I'm not saying the Nasdaq is going down 78%. My prediction was 35 to 45. So let's call it 40. I'm just looking at this, Mike. I wasn't listening to the levels. 40 would be on the Nasdaq about 65.28.75. No, I'm sorry. That's completely wrong. It'd be, my wife just laughed at me. 97.92 would be the
Yeah, that's
level.
right around here.
Mhm.
And if I go back to the day, so you're longer term at 97.92.
It's weird how this stuff sometimes works out. What do we got?
97, look, that's the, look at the
Yeah,
little
there you go.
peak of 7th February right before the COVID.
There you go. So there's a reason for that level. I kind of just pulled that 35 to 45% out of what I thought was reasonable in terms of overvalued if the Fed were tightening a lot. And it actually is a level that I wasn't aware of.
So where would that put it on the harmonics? That would put it definitely below the 62 and a half.
That's ugly.
So that would be very ugly. Whew. All right. Well, we'll see. It'll be interesting. That's why you have to tune in to all these live streams to find out how it plays out.
Hey, Mike, real quick for Rich, I don't have anything in the Aussie in terms of trades. It looks like it might be running down a formal triple bottom, which I don't like. And I think the Aussie will definitely be affected most by the China slowdown of some of the major Western economies. So I don't love it. But, we had a little brief double bottom that wasn't quite perfect, but did reach its targets if you were to have played it. But it's over now. We've turned around and we've come down below the 200 week moving average on the Aussie. This is on the weekly that we had that little ugly, not quite perfect double bottom. So I don't love it. I don't have any reason to dislike it on a technical. Let me rephrase that. Don't have any reason to like it on a technical level. And I think they're going to be most affected by problems in China. So probably stay away from it.
Well, let's just see. I mean, just from these, let's go through the statistics. Yesterday, it closed below 62 and a half. So that favors a return to 0.705 to about 0.696. So rallies, especially back to the daily rotation zone, would be sells at this point.
Yeah.
So, just if you're in doubt, if you want to know how my quick and dirty analysis, just use these harmonics and watch the 50%, the 62.5%, and you'll get a lot of insights from that. Appreciate you guys doing the TA on the potential NASDAQ floor. You guys are the best. Well, thank you for being here. We appreciate all our viewers.
We do.
We do. So that's where we sit. We're going to wrap this up unless you have anything else.
No, Elon replied. I got to go.
Oh, Elon replied to you?
Yeah.
He already banned me.
Oh, no, that's the real Elon Musk 01. He's got 6 followers. Never mind.
Oh, okay. All right. Where the CPI number? Where, Rich? Where's?
Now we get PCE this week in the U.S.
Yeah, we get
CPI.
PCE in the U.S. If you look,
I think on Friday maybe.
Here, I mean the tomorrow's not much of a day, but the Friday here. If I go back here, you see here, April 28th, we got GDP growth quarter over quarter for fourth quarter, continuing job claims and core PCE and GDP price index. So Thursday's a biggie at 7:30 Central, and then Friday you get more of the core PCE stuff. So Thursday and Friday are biggies this week. Keep that in mind. Tomorrow's just sort of a pause day. I mean, there's stuff, but it's not. I don't see anything that's earth shattering.
Right.
So tomorrow might be a little breather. And again, we're in a Fed quiet period. It's so nice not having to deal with them speaking every day. Oh, all right. We are going to wrap that up. Our Australia CPI. Okay, thanks for clarifying that, Rich. Well, I'll have to look to see how that's coming out. And with that, I'm going to talk to everyone later.
See you guys.
And you'll be back on Thursday, Bob?
I'll be back on Thursday.
All right. We'll talk to everybody then. Again, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, please come back, leave some comments, and like the videos. Again, thank you for being here, and I will talk to everyone later. Bye for now.